Hello, traders. Welcome back to Your Nifty Guy. I hope all of you are doing well. The market is like a puzzle. Every day, a new piece falls into place. And today, I have got some important observations from the charts that could help you plan better for tomorrow's session. Let's begin with today's thought. Opportunities are never lost, they are taken by those who are ready. So, stick around till the end because these insights might just be the missing piece you've been waiting for. If you find value in these daily videos, make sure to like the video, subscribe to the channel if you haven't already, share it with your trading circle, as well as put down anything that you might have in your mind in the comments box. And on that note, we'll start with the video. And as usual, the video will be divided into two parts. First will be where we'll discuss about today's expiry that we traded. How did we trade? What trades did we take? What trades could have been taken? What was going on in my mind? How was I looking at the charts while in the live markets? I'll share everything. And then in the second part, we'll discuss the trade plan for tomorrow. Now, today's expiry has cleared up a lot of good things. Now, again, on an intraday basis, the move was quite haphazard, but then it definitely did give us some trade. And it has definitely set out the tone for the coming set of trading days, as well as given us some clarity on the next move ahead. So on that note, we'll start with today's plan. So yesterday, what I had told you guys was that we can create a long entry above this particular high with a pullback. Now market did give us a closing around here. This was the good pullback. And why do I call this a good pullback is because the markets did test the lows of this candle, plus we got a good inside bar. Now, I have always emphasized the importance of an inside bar, even if this entire big red bar was missing and it was just this entire just this inside red bar, the doji which is there, I would still have taken this particular trade. And this is where the first trade was taken, wherein the entry was right here. I had placed the SL just below the red bar. Now this was a straight move, there was no, the closest swing was this one. So in order to minimize my stop loss, I had placed the stop loss just below the low of this red candle. I got out around this red candle on the basis of the three rules of candlesticks that I follow, which is a lower high compared to the previous 5 minutes candle, a lower low compared to the previous 5 minutes candle, as well as a closing below the previous 5 minutes low. So this was the entry around here. This was the exit, a quick scalping trade. Now, I have been specifically emphasizing on taking quick, sharp trades right now because the market was extremely volatile. And even if you look at the price action in today's market, after this particular move around here, we got a double top. Now, of course, I did not trade this particular double top because we had gone up above the weekly fib level. Now, in yesterday's video as well, I had clearly mentioned that above this level is somewhere is the place where we can add quantities in our trade, right? And above this particular level, we will be turning bullish positionally. So on a daily time frame, this was the weekly fib resistance, right? Entire 6 weeks of fall. We came here, we took a resistance, we fell down, and now this is a good double bottom. If you look at a weekly time frame, like I had mentioned, this was the high of this particular thing is a good. So we have formed a good double bottom on a weekly time frame. Now, in Thursdays or Fridays video, I had emphasized certain important points, and this is among one of them. So I was anticipating some short covering once we are above this particular level, which happened in the markets today. But the only trade that I took today was this particular trade. The reason, again, I was not looking at any short trades, and I'm glad I was not looking at any short trades. And why was I not looking at any short trades? Because I was prepared to create good long entries above this particular zone. So that is the power of being prepared for your trade setups. Now, around here, again, the markets formed a double bottom. And in case if I would have taken this particular trade, my SL, which would have been around here, would have been triggered. Look at the kind of price action around here. Now, the reason why I did not take the trade, the breakout of this particular zone is again RSI, in which I could see a good divergence. And again, the trade which actually happened was around at the retest of these levels post this particular breakout, wherein markets rallied one way and we have closed above 25,250. It's a good level for a good closing for the markets on a daily basis. But then again, around this 2 p.m., I was looking at the expiry based trade wherein I was looking to trade at a hero zero setup. And as per my setup, again, my setup did not work out today. As per my setup, there was huge amount of put writing below, as in there was a good amount of support which was coming in from below. And I added or combined that with the RSI divergence on a 5 minutes time frame. Markets was making new high, RSI was making new low, and that was the reason what I was planning was in case if the market is going down and forming, giving me some negative signals, that is where I would have traded into a short position for the hero zero trade. Try to understand the point here. It is not that if the market did not give me the short trade, I don't know how to trade or I do not know how to plan my trades, right? I had planned my trade based on certain criterias, right? Based on the RSI divergence plus as well as the open interest, right? So open interest was the highest around 25, 24,200. These were the levels where there was a good amount of 24, 200, 150, 100, where a good amount of put writing was there, right? So in case if markets were to go down, all those put writers would have been trapped, leading to a good move in the puts. And that was the simple reason why I was tracking that. And I did not participate in any of this up move, not that it fulfilled any of my trading setups, but since I was looking at those particular trades, again, I did not participate in any of these moves, and that trade also did not happen. So, what happens at the end of the day? At the end of the day, I have still closed in green. I took a trade which ended in profits for me. Second, maybe the things did not work out as per the plan that I had, but it did not give me any loss, right? So in case I would have jumped blindly into the puts, that would have given me a loss because the markets gave a good up move towards the end of the day. But that is something which I always say, let the markets commit to you before you actually commit to the market. Now, I was planning based on the open interest, and I would have entered in case if I would have seen those put writers exiting their positions, plus price action forming some negative setup. Say, for example, around here, if this would have gone up here, given us a liquidity sweep, and then this low would have been taken out, it would have been a beautiful trade on the short side. I am simply preparing you for future scenarios which might play out. So these are the things to keep in mind, not exactly keep in mind, but these are the things which were going on in my mind while in the live market, right? So I hope the trade that I took and the trade that I did not take is the logic behind both of them is extremely clear. And again, for tomorrow, the good thing is that we have actually got a closing above the weekly fib resistance. Like I was telling you guys that till the time we are in between these two zones, we are expecting some volatility. But right now, today, we have actually got some good closing above this. This is a good decisive closing on the 75 minutes time frame. The price action, the market structure that we were studying is in a constant uh, higher high, higher low formation. And we have given a good closing above this. So this is something which turns the biasness in my mind towards the positive side for now. All right. I'll be deleting this. I don't need this level for tomorrow. Now, the plan of action for tomorrow will be very simple. Now, today was a trending day. Number one, simple plan of action. The rare trade that I always speak about. I do not know when will I get a good example in the live market to show to you, but nonetheless, something to keep in mind, right? Now this weekly fibs resistance, I'll just keep not delete it from the charts right now. I'll keep it on the charts for some time. Uh, but then I want a bullish candle at the start of the day. Now this trade can only be taken at the start of the day. I want a bullish candle at the start of the day, which gives me a closing above today's high, and then the low of that candle gets taken out. I will be planning a short trade. Now, when I will be planning the short trade, what will be the levels that I am looking at? Right, this will be the levels around which I will be looking at booking that short trade. Above this high, we are looking for a long entry with a pullback, of course. Around this level, if we see some buying, we can create a long entry. Below this, we will look at a short entry. Now, I have put out all the scenarios. Mostly, this one or two of it will play in case if we are looking at a gap down opening and then we form a base around here and we go up, we can look for a long trade. This trade can be a good trade if that happens. It offers a very good risk to reward ratio, right? It works on the mechanism of the trap trading, wherein people who would not have participated in today's rally, I'll just explaining the logic behind this particular trade, wherein people would not have participated in today's rally will be having FOMO, and they might jump at the start of tomorrow's trading session, wherein if they give us a closing above this, and then once this low is taken out, these are the people who will be trapped, and we can get a good move on the downside. And once we are in this particular trade, we'll look at booking our trades around these levels, and of course, above this, we are looking for only a long entry. So again, for tomorrow, because today was a trending day, I am expecting some sideways action as well. We can simply remain in this zone as well, not trade anywhere, not give any good decisive move, or we can simply break out and still be in a sideways zone. So I'll keep the trading activity to bare minimum for tomorrow as well. So yeah, that wraps up today's trade plan. Remember, trading is not about predicting the future, it's about preparing for it. If this video helped you, make sure to hit the like button, share it with fellow traders, and subscribe if you haven't already. I'll see you tomorrow with another market plan. Until then, trade safe and stay disciplined. Cheers, guys. Thanks for tuning in.